Good morning, everybody. How you doing? Welcome to Tuesday morning, May the 25th, 2021. I'm glad you could make it join us today. Stock Markets with Bruce, the one-on-one session, is it over the phone or Zoom? How much liquidity would you recommend someone have to make most of the session? The session, what I usually do is I do it right like this, right through a StreamYard, which is through my YouTube channel on a private one-on-one setting. So the show is a private show, and I'm over here on this half of the screen, right, like that, like that, like that, and then you're over here on this half of the screen. And so all you need is your laptop, or if you got an iPad or you got your phone, put your phone onto put your camera, and I send you a link from StreamYard that automatically gets you in here, and you're just sitting in front of your computer, and it's like we're just talking back and forth. And what we sometimes do is we look at each other here like this, rather than we look at each other over here. So we sit far enough back from each other so it doesn't matter. So if I'm watching myself, like I'm looking at myself, I'm not even looking at the camera. There's the camera, but I'm actually looking at myself like that. It doesn't look like we're oh yeah, well, how are you doing today? It's nice to see you. I'm great, I'm fine. We don't do that. It's very comfortable, and within a few moments of time, we forget that we're actually we're just talking now. We're just, it's incredible how it transforms very quickly. You can screen share something with me if you have an idea you want to show me something. You can hit the share button and show me what you got. Sometimes you'll hold up a piece of paper and say, "Here's what I got." That kind of thing. We figure it out. It's very casual. It's not formal. It's not intimidating. It's fun, and that's the main thing. It's really a lot of fun. There's a lot of laughing going on, and we just get to know each other. And most of you know a lot about me because you watch me all the time. The rest of it just kind of flows. Anyway, there you go. I have an old $5 call option for VGAC expiring on July 16th. With the lack of movement, do you think I should close this and buy another call for sometime in 2022? Well, 7/16, that's July 16th. So the meeting is June 10. They'll start trading on the market around June 14, 15, 16, somewhere in there. They'll start trading. So you have a month. So I would wait, let the market open up, and go from there. On the other hand, I don't mind the idea of you cashing in a little gain here. Hopefully you've got a gain, or certainly you've got book value. But if you wait and it goes to 15, 18, 20, then roll over, or do you go now and roll into it? This is one of those, you're going to win either way. Just a question of, do you win more with a rollover and higher numbers of contracts? Can you get 1250s for January 2022? Can you get more than what you have here? Like, can you turn this $5 call into triple or quadruple the number of calls you have now? Can you do that? That might be the better way to go. Higher leverage. Something to think about. I don't know how to interpret the value of my call contracts. It says Gamestop, 210618 call 222. That would be a 2021 June 8. Is it what? No, that's not what that is. Gamestop 210 contract June 18th call. No, that's not what it is. Gamestop 21068 2021 expiry June 18th call 220. What do I want from a call contract perspective when I'm making or losing money with this scenario? Well, okay, Jen, I don't know what you've done. I don't know. Do you own this contract? Did you write this contract? What? Are you long? Are you short? What's it trading at? What's going on here? The 220 contract is out of the money. It expires on the 18th. That is in a couple of weeks, 3 weeks. It dies. You got to help me here. You're not giving me all the info that I could use here as to what the heck you're doing and what's going on. How can I tell you your perspective if I don't even know what your situation is? Help me, please. Help me, Rhonda. Help me, Rhonda. Help me. Okay. June. What is going on here? June 18th. Here we go. June 18th, 220 call. A June 20 call is 1620 last trade, 1535 to 1645. That's the market right now. So are you going to write call contracts against GameStop? You have for June the 18th at a $220 price. If you do, you're going to be bringing in anywhere from 1535 to 1645 a contract, depending on what you offer it at. We're talking about a contract trading at 1620. That means it's $1,620 per contract in value. And I'm not sure how to interpret the value of my call contract. So at the moment, the value, if you are short the call, if you've written it already, it's now valued in the marketplace at between $1,530 and $1,645. It's out of the money. It's out of the money. $33 roughly, $32. Stock's at 187 right now. That's where we're at this minute in time, this moment. So if you wrote it, you're looking for it to go down in price, and it'll go down in price as it gets older, as it gets closer to June 18th, if the shares stay under 220. Right now, they are under 220. They're up today. Yeah, the shares are up. They were up yesterday. They're up today. But they're nowhere near 220 really. The shares were 190 something. This is today already, but they've backed off to 187. So that's where we're at right now on this contract. I hope with all this guessing, I've helped you. If you've written this call contract, you do nothing. You don't do anything. You just sit there. Just wait. GameStop is 187.40. It's up 760 a share right now. Great. You would be delighted if the stock goes to $219.99 on the very day the option expires. That would be perfect for you. The contract will be worth nothing. You get to keep all the money you brought in, and the stock went up to $219.99, and you're up on the stock. That would be your perfect scenario. Perfect. But if the shares go between here and 215, 220 between now and that point in time, those contracts will die worthless. All the money you sold it for is yours, and now you can write a new contract. And now you might write a 250 or a 260 and bring in more money. That could be the game plan. Jen, that's my guess. That's my interpretation on what I think you might be asking me, but I don't know for sure. Yes, I wrote the contract. She said, I wrote the contract. I own the stock. I'm long on the contract. My average cost base $16.99 one contract. You are short the contract. You are short. You're not long. You're short. You wrote it. You sold the call contract at $16.99 when you created it. You need to buy it back, or you need to let it expire. Those are your choices. You don't have to do anything right now. And I'm telling you not to do anything right now. I'm telling you to lay low. Your contract is between roughly $15.35 and $16.45. It seems to be the value at the moment of the contract. If the stock drops in price as the day wears on here, and it can, not that it will, but it could, that would mean that the contract will drop in value because the lower the stock goes, the lower call contracts trade at. The higher stock goes, the higher call contracts trade at. The 220 right now is 1575 to 1665, last at 1590. So in theory, if you were to buy it back at $15.90, if you'd have bought it back there, you would have made $1.09 on 100 shares, which have been $109. So right now you're ahead of the game. You're making money on your call contract because the call contract is trading at a price equal or lower than what you sold it for. And if the shares stay here in this 185, 195 window for a while, if this is where they're going to be for a while, this contract will slowly drop in value because the time keeps disappearing on this contract's life as each day goes by. Now, this weekend is a big weekend for you. You don't know this, maybe. But those of you who have written call contracts, you know, or you should know, Monday we don't trade. It's a holiday. And so next week, there's only 4 trading days on the market. Same for contracts. So if you write a contract that expires next Friday, if you write it today, that expires next week, Friday, it only has 3 days to go this week, Wednesday, Thursday, Friday. and it only has 4 days to go next week, Tuesday, Wednesday, Thursday, Friday. So it's actually a 7-day contract. And yet next Friday from now is like 10 days from now, but it's only got 7 trading days. Interesting. That means the deterioration will be quicker. So this contract, this 220, if the stock stays where it is by next week, likely it'll be down into the $13 neighborhood, $13.50 neighborhood, just because of time depreciation. That's likely what's going to happen. If another week goes by and the stock stays about this range, your contract will probably be about $8, maybe $6. It'll really drop. It'll start to really drop. But at the moment, it has until June the 18th to live. The stock is up today, $7.74, and so the contract right now is showing a $15.75 bid and a $16.65 offer. So that's where it's at right now. So you're in the money, you're ahead, you're richer, your stock is up $7.80, and your contract is down $1. So you're actually $8.80 actually richer per 100 shares. So 100 shares, you're $880 richer. 1,000 shares, you're $8,800 richer today on both fronts, but combined. There you are. If the stock goes to 195 this afternoon, your contract might go up to $19. And so you might be down $200 on your contract for each one you wrote. But you're up another $700 on your stock. You'll be up $1,500 today on your stock, down $200 on your contract, and you still don't have to buy it back. You just sit there and wait because it's out of the money. It's still out of the money. The gamblers are paying big money, a big premium for a $220 call contract right now on Gamestop. That's a big premium to pay. Anyone buying this call contract right now around $16, they actually need the stock to go to 236 by the expiry day to break even. 236 is what they need to break even. So they are really gambling on a move. They are really wondering, could this go to 275, 300? It could, of course it could, but it hasn't, has it? Not yet. At 188.46, up 8.45. Welcome to the option market, the stock market, and all the little things that we're going to teach you in our class. Get ready to attend the master class and learn about this in much, much more detail. How many of you would like to join me on a master class? How many people should I have in a master class, and what should I charge for it? What do you think? How much should I charge for maybe a 1 to 2 hour master class? Somewhere between, what do you think, 10 to 50 people, somewhere in that range. How many people should be there? How long should the class be, and what should I charge for it? What do you think is fair to be a member of the live audience so that you can ask me direct questions one-on-one live? What do you think? Let me know your thoughts. I'd like to find out what you're thinking. This question I can't answer because, is it going to take years for GameStop to go higher, or weeks, or months? They make $70 million in profit. That's $1 a share in profit. They make $700 million a year in profit. That's $10 a share in profit. They trade at 50 times earnings. That's a $500 stock. Do you want to have a $500 stock, or do you want to split it 10 for 1 and have a $50 stock? What does management like to have? Where do they want it to be? If they reach $10 billion in sales in the next year or so, and if it's estimated that in 2 years they can reach 12 to 15 billion in worldwide sales from online selling globally, could they generate $700 million in profit? You're doing 12 billion in sales. Can you make $1 billion in profit out of it, or something like that? Can you make 10, 12 bucks a share profit maybe? Trade at 40, 50, 60 times earnings because of the growth curve that you're on? You got a $500, $1,000 stock on your hands here. You're probably going to see a split. I just don't know what kind of split. I don't know what day. I don't know what level, but shares are going higher. There's a reason people are buying this stuff. It's up 12 bucks today, and they haven't made an announcement that I'm aware of. I don't see a news announcement anywhere. Do you? Do any of you see anything? I got nothing. It's going up $12 on no news. It went up yesterday on no news. It was $145 a share 2 weeks ago. It's $192. It's the highest level it's been at in what, 4 months, 3 months? March? It's looking good. Welcome back, folks. The last time we saw $200 a share was something around March something. Yeah, get ready. Get ready. Thank you, everybody, for that. If you'd like to talk to me about a 1 hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.